Our guests today are Gillian, Emmett, Moldowan of Shearman and Sterling, Peggy Foran of Prudential, Ning Chiu of Davis Polk, and Amy Wood of Cooley. The first three are New York City. Amy's in San Diego. I'm Brock Romanak. We're going to talk about human capital management disclosures. Human capital management. 5 years ago, who would ever think we'd be talking about this topic? But it is among the hottest of hot topics in a proxy season of many new hot topics. I don't recall a proxy season in my career in which there's been so many new hot topics. I mean, there's so many new hot topics that executive pay really isn't a topic that I'm basically covering during this proxy season spectacular conference a little bit, but normally that was like 80% of my proxy season conferences. So it's really amazing to me how much things have changed in really a relatively short period of time for the good, I think. So Gillian, the first question that I have for you is, what is the SEC's new position about human capital management disclosures?
Sure. Hi, Brock, and thanks for having me today. One thing to note when we're talking about human capital management disclosure is that the new rule that everyone is focused on is not really a proxy rule, although it really comes in as part of proxy season, of course. It's a new rule under Regulation SK. It's item 101C2, and it's actually going to be implicated when drafting 10Ks this year. And so what the rule requires is that the issuer discuss the information that is material to an understanding of the company's business as a whole with respect to a description of the registrant's human capital resources, including the number of persons employed by the registrant and any human capital measures or objectives that the registrant focuses on in managing the business, such as, depending on the nature of the registrant's business and workforce, measures or objectives that address the development, attraction, and retention of personnel. And I think the key takeaway here is that this is principles-based disclosure. Although there are some examples provided, they aren't requirements. And the old rule that this is essentially replacing, although of course replacing in a way that is much more expansive, is that previously issuers in their 10K had to indicate under a header entitled employees, in essence, how many employees they have. That rule isn't part of the disclosures anymore. Now we have human capital management, and it's looking at a broader perspective from a principles-based analysis of what is material to the operation of the company with respect to people.
Yeah, principle-based disclosure, it tends to force us to become more of a lawyer's lawyer, I think. So I'm kind of excited about the idea that more of the regs that securities lawyers are facing are principles-based. But it is a hard shift in mindset to make. And it'll be interesting. Obviously, everyone's going to be looking to see what everyone else is doing, and that's typically instructive. But of course, you want to do your own homework, looking at your own company circumstances as to what's appropriate for you.
Yeah, and I'm sure as we get into this discussion further, people will talk about the industry-specific nature of what's going to probably happen here. Companies are being provided with flexibility in determining what is material to the company with respect to human capital. But there's certainly examples that we would anticipate seeing. And in fact, as this discussion evolves today, we've been looking, and I know the other panelists, I'm sure, have been looking at disclosures thus far. And there continues to certainly be disclosure of the number of employees that companies have, perhaps unsurprisingly, because this is information that was previously provided and also mentioned as a particular example in the rule.
So Amy, the SEC really is sort of following some of the investors' lead here, that they've been seeking some disclosure in this area for a couple of years. What types of disclosures do investors typically look for in this area?
Yeah, and I think investors are quick to emphasize that they're really looking for, well, let me step back, that the reason they care about this is because of so many studies and their experience showing the positive correlation between human capital initiatives and how companies treat their employees and financial performance. So they're emphasizing that that's where they're coming from. And backing up the principles-based regime, I think they're stressing that it varies by industry, varies by company. Many of the institutional investors are suggesting that companies pay attention to the SASB framework that's industry specific. And there have been a few investors at the forefront for several years, and BlackRock would come to mind for everybody, I think, first. So BlackRock's been engaging and has made human capital a disclosure priority for several years. Larry Fink's 2018 letter to CEOs made a big splash in this space, and kind of generally asking about the purpose of a corporation, but was there touched on also just really what companies are doing to create a diverse workforce. From there, what companies are doing to retrain and train and provide employees opportunities to adjust to developments. In addition to BlackRock, Vanguard's been focused on this topic. State Street's been focused on this topic. CalSTRS and CalPERS are focused on this topic. Most of the institutional investors with engagement priorities and stewardship teams have been focused on this for not just recently, but several years. So they all publish great materials in terms of what they're looking for. I think right now, and that's changed over the years too, when initially they were asking questions. Right now, this is such interesting timing with this rule coming into place in the year of the pandemic, and questions about what that meant for workforces and staying at home, and how companies have addressed all of those adjustments that have been needed, as well as the kind of racial reckoning, at least in the United States, and questions about diversity. And I think this requirement will get a lot of interest and attention from investors on the diversity front. And there's been more question and sort of interest in board diversity, but this certainly extends it to complete workforce diversity. And I think that will be at the top of the list of the institutional investors in terms of specifically what within human capital they're looking for. Workforce diversity will be there.
And Ning, what about the proxy advisors? They're obviously pushing this too.
So I think their focus is a little bit more narrow in terms of what they're looking for, and it touches on one aspect of what Amy was talking about, which is race and ethnicity information, but also, at least now, currently focused on where the board is on it. What does the board composition look like? And it's a subset of the information that we're talking about today, but it's a key component for both the proxy advisory firms and for investors, because investors do view that they vote for and against the board, right? So they don't get to decide whether the CEO should stay on or whether the leadership should stay on. Their big stick, as it stands, is for director elections. So the key focus for the proxy advisory firms as well is on the racial and ethnic diversity of the board, just as it has been on gender. What ISS has said is that starting from next year, 2021, which is almost here, can't be here soon enough, but they're going to start noting whether companies are disclosing racial and ethnic diversity and whether or not they have racial and ethnic diversity. And for 2022, they're going to exercise their ability to recommend against the nom-gov chair if a company doesn't have any racial or ethnic diversity. And they will, at the moment, take aggregate stats versus in the director by director, because that's a question that has already come up. Glass Lewis is similar. Glass Lewis is still focused on gender, and in fact, they're going to start noting a concern in 2021 if you only have one lone female, and so they want you to have at least two. And then they're also going to be looking at companies' disclosure about board diversity and whether there's a Rooney Rule to get more board diversity. So the focus for the proxy advisory firms is really centered around the board, which makes it a little bit easier because, as we'll keep talking about, this area is quite expansive, and it's a little hard to kind of figure out how much to say, what to say, which I know Peggy's going to start talking about.
Right, Peggy. Larger companies like yours, Prudential, have had some time because of the interest from your major investors in this area and perhaps otherwise, but smaller companies might not have really thought about this yet, what their strategy is. Can you give some advice for those companies that haven't grappled with it yet, how to look inwards and start developing what a plan should be?
Sure, Brock. But first of all, thank you for inviting me. And you have been such a mentor and a leader of women attorneys. And it's not lost on me. Look at this panel. And, for the number of years that I've practiced law, and when I think in the beginning that I was probably the only woman in the room, and I now look at these incredibly talented women. And it's you, Brock. You identify and you develop and you give them the opportunity. So thank you. And it really does feed into what I'm going to say, which is at a company like Prudential, we have actually been blessed by having an incredibly diverse board. 80% of our outside directors are diverse. We've given a significant amount of aggregate information on our board. We've also, years ago, I was actually an outside lawyer told me I was going to go to proxy jail. I started putting a lot more information in the proxy that was not legally required, but it was responsive to the types of questions that we were getting from our institutional shareholders, and it grew. And so, for example, the last couple of years, we have a trifold that really talks about our stakeholder commitment, and really that we are a purpose-driven company, and really talks about how, among other things, the board and the company looks at its human capital asset and how it manages it. So when the SEC came out with their rule, I said, I don't think I need to add that much additional. I just need to take some of the things that we've been saying and put it in the 10K. And I also look to see what is presented to the board, because I think from the materiality perspective, that's a very important thing. How do you actually manage? What are the statistics you're giving? That being said, and I know we're going to talk about some of the early disclosure, I really had to inform my executive officers and board members, what goes where. So now we have this new 10K requirement, which I think for most folks at most is going to be a half a page. It's really going to be the 10,000 feet, what's material, give the numbers, and again, some of the other information. But that doesn't mean we're not going to expand the other disclosure that we've done in sustainability reports and the proxy statement, because our shareholders, our stakeholders are asking for it. Many of the larger companies have committed to giving EEO1 or EEO1-like information. So I think you're going to see an expansion on that. You're certainly going to see an expansion on your commitments to racial justice and diversity. And what are you doing? And how are you going to evaluate if you're being successful? And what are the metrics that you're going to use? Just as an example, one of the things that we're thinking of doing is doing a summary ESG report. The reason we're doing a summary ESG report is our sustainability report is usually not published until June or the July timeframe. And since many of our investors are asking for this information, I'd like to have it available sooner than the end of June or July. So by doing a summary ESG report, it will contain kind of the top level information that you see on a sustainability report, but it will not be incorporated into the 10K, nor will it be in the proxy statement. But it does really give the information that that investors are asking in the diversity and inclusion and racial justice and talent. And even board diversity, although I think you'll probably see more of that in the proxy statement.
Yeah, I just made a short video with 10 examples of graphics that companies have used to show board diversity. And it's interesting the different ways that companies are doing it. And panel that I just taped and Kiera talked about Uber perhaps having even a matrix, a board matrix just about diversity. So it'll be interesting to see if they really do that and what that looks like. Gillian, what about the frameworks and the standards that are out there that that folks can look at right now to get examples of what they might want to do? We heard Peggy mention EO1.
Sure, absolutely. And then I think Ning might have had something to share with us as well. I mean, I think Peggy's exactly right. For many companies, this is not a new beginning of looking at human capital management disclosure, but it's a new way of presenting it. So one thing I would just start with in thinking about frameworks for each company is think about what you've already been doing, because a consistent and cohesive narrative across all of your different disclosure documents is going to be really key here. The new rule is specific to the 10K, and it's specific to this concept of presenting the material factors that are considered in running the business as a whole. And that's a very specific ask. And in that, you want to think about what has been the narrative for the company, but it doesn't necessarily need to be everything that you're presenting, nor will it likely be everything you're presenting in CSR reports, this idea that Peggy just mentioned of ESG reports, and then the proxy itself. I'll pause for a second because I don't know if Ning, you wanted to jump in.
What I was just going to add to what Brock said was on the different ways to present diversity disclosure, especially on the board level. People should be aware that NASDAQ's new rule proposal has a chart in it. And so if that's something that's also going to get adopted in the future, not just by NASDAQ companies, but also New York Stock Exchange companies, you might just want to look at that as well. And it's a little different than what you've seen. It looks like it was pretty carefully crafted so that it lays out the different groups, and so it's individualized, not aggregate, but it doesn't identify anyone by name. So it's a little bit unique in that way.
In the, and the NASDAQ proposed rule itself is just another really interesting facet of what we're seeing in terms of expanded diversity disclosure and requirements. With respect to the 10K rules, I think there, from a framework perspective, one thing to consider is that these are really meant to be meaningful quantitative and qualitative data points. What we've been seeing since the effectiveness of the rule on November 9th is that there is more qualitative than quantitative that we're seeing in these disclosures thus far. And I think for many companies, that's the right way to look at it, especially if they're new to this area and they don't have the fully vetted metrics on a numerical basis that they're comfortable to include in their disclosures at this point. SEC Chairman Jay Clayton has said that, as with non-GAAP financial measures, he would expect companies to maintain metric definitions from year to year and be able to show change. So one thing to think about as you're starting to present metrics is, are you ready to continue to review and vet those metrics year over year and be able to show them on a year over year basis in a consistent manner? For companies that I think are coming to this new or are looking to figure out exactly what metrics to present, as Amy mentioned, the SASB human capital measures are a good place to take a look. SASB's broken down human capital measures into labor practices, employee health and safety, and employee engagement, diversity, and inclusion. So that's one place that companies can look for a set of standards that they might want to implement in considering how to track human capital on a more metrics-based approach. In terms of ideas for examples from disclosure we're seeing thus far, I will say that it doesn't overall seem to necessarily directly relate to external standard setting, but instead seems to be a message from the company as to how they are thinking about human capital in a holistic way for the management of their company, with certainly an emphasis on diversity and inclusion, but also health and employee safety. And I think from industry to industry, the health and employee safety aspect of it may be elevated above diversity and inclusion as well as a key measure for companies. It'll be interesting to see how much of the disclosure ends up in the 10K versus continuing to be in the proxy statement. As Peggy mentioned, many companies have done voluntary disclosure in their proxy statement on this topic, and it will certainly be interesting to see how much of that may be transitioned over to the 10K but also for some companies, how much will remain in the proxy with a different kind of disclosure in the 10K, and then perhaps making reference to the proxy.
So, Amy, why don't you walk us through a few example disclosures? These are more recent 10K disclosures since the SEC's new rules.
Yeah, and I'll focus on these 10K disclosures. As everyone's been mentioning so far, this does look different from the proxy and what we've seen with companies that have been doing this for the last few years because it's in the 10K. I'll highlight a few that are interesting and point out what's interesting about them. And they're very in line with some of the predictions that have been made so far. So the first example here that we're looking at is Visa. And one interesting thing to note about Visa is the diversity statistics. So actually using the quantitative metrics here for to quantify diversity, as well as giving a turnover percentage, which is not something that all companies have been comfortable doing historically or may do this year, but that's notable about Visa. The next example is Rockwell Automation. And what's notable here is that they do provide some of the EEO1-like disclosure that Peggy mentioned earlier. And so I think this is notable for that reason. The next example, National Fuel Gas Company. And another thing, Peggy, that you mentioned earlier was maybe cross-referencing, and so putting part of this into the 10K disclosure here, but cross-referencing other places where there may be more details. So that's what they've done here, cross-referencing the corporate responsibility report. I suspect we'll see more of that. And the next example is Haynes International. And I think this is a good example of a company that went into some pretty good detail telling the story about the impact of COVID-19 and related programs to their workforce. And then the last example here is Johnson Controls. And Gillian, as you were mentioning, that the discussion on health and safety might be more relevant to some industries than others. I agree with that point. And this is a good example of a company that did touch on diversity and inclusion, but also touched on health and safety and gave some quantitative metrics for health and safety as well.
Well, you get a gold star for showing us examples. It's always great to get some practical guidance. Fred Cook also has a memo with 50 sample disclosures. You might want to check that out. And Gillian, what about where this disclosure might go in the 10K or the proxy?
Yeah, absolutely. And I think just before touching on that, along with the examples that Amy shared, which do show a variety of ways of looking at this, I would note two things. One, you have Starbucks, which was one of the first out of the gate, and also with a message of being a leader in this space. So I think it'll be interesting as this evolves this year to see what disclosures look like from companies that have taken an active position in this space vis-a-vis their website or in other aspects of their business. As compared perhaps with companies that, of course, probably care about their employees and want to have good disclosure, but are not necessarily putting themselves at the forefront of the conversation. So that would be interesting. In terms of placement, this is part of that 101C, business disclosure. So I think it's sensible to have it in that section of your 10K. As I think people may be familiar, the 10K form is more of a form filing than the proxy. So when we talk about placement in a proxy, there's really can be so much variety, and the proxy schedule 14A itself does not lends itself to movement and people choosing what is the right way to frame things. On the 10K, it's a bit more formulaic. So I think we'd expect to see this disclosure in essence in the same location across 10Ks. It's also worth noting, and for companies that are looking for examples or seeing what's happening, this disclosure is required in S1s as well, in registration statements. So we've at least since November 9th been taking a look at IPO disclosure as well, in particular in connection with work that we do in that space. And I think you can see a distinction between the way that mature companies are approaching the human capital disclosure versus newly IPOing companies, which very often are including that employee data information with perhaps just a sentence or two about their approach to employees more generally. So that's something else just to keep in mind. This is beyond the 10K, it's in registration statements, and it's applicable to IPOing companies along with companies that are preparing their annual disclosures. What'll be interesting to see, I think, is the impact of this on proxy statements. So as we were talking about earlier, proxy statements in the last few years have evolved to include certainly executive summaries and other descriptions of important business and company values that are set out in those proxy statements, which are communications documents to shareholders. And there's been quite a bit of human capital management disclosure there, although all on a voluntary basis. One thing that'll be interesting to see is if that continues to stay in the proxy statement and evolve on the track that it has the meaning, and purpose for there, which is that investor communication, although we now have the 10K obligation, and how are companies going to look at coordinating that message along with the message that they have in other reports like their CSR report.
And Peggy, what about the team that's making input into this disclosure? I imagine it's a little bit different than your typical disclosure committee, human resources, obviously.
I think it's very similar to the team that you have with your proxy statement, which includes, a lot of folks. It certainly includes your controllers now. If you're dealing with the 10K, they look at that. The financial people really tend to look at the 10K as their document, with lawyers giving information or support. You certainly have your D&I folks, you have your HR folks, you probably have your risk folks involved. And you're going to have some of your data scientists or folks that are giving you kind of the demographic information, particularly if you're a global company. You're going to have your corporate communication folks. And again, it goes back to what Gillian said. How are you coordinating this? For many reasons, I think larger companies are looking at the 10K as answer the question. Many of my shareholders and my stakeholders, that's not their go-to document. For those that vote proxy statements, they're going to go to the proxy statement. But I would say the majority of our stakeholders are going to go to a sustainability report. And that's why we decided to do this summary ESG report, which really will have a lot of that information there, as well as some of the sustainability and climate information that, many of our investors are asking for, all of which, or at least at this point in the game, are not legally or required by a regulator, but they are really answering the questions that our investors are asking. So for that, you need you need a pretty robust team. One other thing that it would be interesting to talk about is really the legal liability. Also, the independent accountants want to get into this game. They're looking at this non-financial information and they're saying, "Woo, that's something that we haven't really dealt with, but wouldn't it be lovely to offer to audit it, and so you're seeing that happen too. For sustainability reports, it's not unusual for the larger companies to have third-party verifiers on some of the more material information, but they certainly have not necessarily used their auditors, and they haven't used their auditors on everything. So for example, the summary comp table, you usually don't have your auditors audit it, just like your demographic information, but you do make sure that you have controls in place. And, for many years now, I've actually sent our sustainability report to our disclosure committee so that we could talk about the controls and they could kick those tires without necessarily getting the whole sustainability report audited. But I think those are issues that you have to take a look at going forward, because if all of this information has to be audited, you're certainly adding a lot more money to your budget in order to get these types of reports done. And that may influence folks on what they're going to be giving from a voluntary basis if it's going to cost, you know, several more $1 million. But I just throw that out. Those are questions I don't know of. I always like to take that little, look into that, look into the ball and to see what the future may hold.
Yeah, I mean, my next question for Ning was sort of a trick question along those lines in terms of should you share this draft disclosure perhaps with investors? And the question is almost an FD question, is this material disclosure? And it's an open question, but you see these lawsuits filed this year over diversity disclosure that some companies have made, and you know, the plaintiffs are claiming that the company, you know, the disclosure was misleading and inaccurate. And so there is a risk anytime you put out any disclosure in an SEC filing, because you can get sued on it, maybe not successfully, but it's a hassle if you do get sued. So Ning, I don't know, would you ever share a draft disclosure with shareholders in any context?
I don't think the shareholders want you to do that. You know, the major investors, you know, as I'll tell you, when you come to them with Plan A and Plan B and Plan C and Plan D for your exec comp, this is not their job. They're not in a position to tell you what to do. They will tell you what they like to see and how they think performance should be aligned. Just like here, they'll tell you that they think human capital disclosure is very important. They want the information. They particularly are interested in racial and ethnic diversity, and they want to see how you're progressing. But they're not going to be telling you whether Plan A versus Plan B versus Plan C format details is appropriate, because that's the company's accountability to make that decision in terms of what they think best and what the company thinks it should be material information, because only the company really knows. So I don't think that they're going to they're not going to want to be asked. I guess that's the way I would put it. So at the same time that they're emphasizing that this is super important, especially at the board level, because again, they believe that the board is what really represents them at the company. And in terms of, I think Peggy was starting to allude to, and Brock mentioned the suits. All the companies are saying, and you know, regardless of whether you're saying in your proxy, you're saying it somewhere on your website, you're making other racial justice statements, people are making a decent number of commitments. And I think the lawsuits, however misguided they may be in terms of the legal liability, the point is that if you're going to make commitments, then you need to show some progress in some way. And the strange thing about the lawsuits is they're against some companies who actually have made some decent progress relative to some other companies. Having said that, I think the idea is the same, is that if you are making commitments, you're going to have to back that up with action. And that is going to be a risk that everyone is facing, regardless of where you're making the disclosure. So the lawyers could kind of divide into, oh, 10K is more risky, or proxy is more risky, or website or sustainability report is more risky. There have been lawsuits on each of those documents. I'm sure there will be theories as to any of those documents. So the commitment just needs to be backed up. I think that's the end game.
And in terms of progress reports, what type of disclosure might be made outside of SEC filings to inform, you know, the general public about the progress against commitments? Perhaps if they're outside of SEC filings, at least you're relieving yourself of the possibility of getting sued in a securities lawsuit.
You may be, but we've seen state law securities lawsuit on sustainability reports too. So I'm not sure that you would be, and also it's kind of hard to understand how this impacted people's investment decisions necessarily. But obviously, like you said, you still don't want a lawsuit, even if it's weak in substance. I think the progress question, first of all, it would be great if we got to the progress question of what have we done and how can we demonstrate we've done a lot of things. I think that's a second level question. And it would be great if that's the next kind of question we talk about next year, for example. I think the progress question is a really interesting one. So I talked to a company that was seriously looking at where they recruit and trying to figure out if they recruit in different places, would they make a difference in terms of their workforce composition? If they went to different parts of the country and they recruited in a different way. So I think in some ways, if we kind of expanded our thinking about this in terms of what's progress, upskilling, for example, is another type of way that maybe you can take your current workforce and train them to do different things. And that could be a promotion of diversity as well, if you're starting to change the way you do some things, if you're automating more services. So I think if we have a more expansive view of what progress is versus just numbers, because as we all know, the numbers don't always tell what's really happening. And so if people could be a little imaginative or think broadly about what progress might mean in this area. I mentioned recruiting, I mentioned upskilling or training. Those could be areas where we might be talking about, well, how do we demonstrate progress? How do we match actions against commitments?
And then what about board oversight of all this, Peggy? I saw a chart this week that for larger companies, the compensation committee more often than not actually has a broader title than compensation committee these days since their purview has been enlarged. What are you seeing?
I think it depends. Years ago, this is something that we identified that was critical and important, and it was owned by the governance committee. Now that could have just be us. It turns out that the chair of our governance committee used to be head of the EEOC, as well as sustainability at Dell. So he got this, he knew this, and he's been an incredible overseer and partner, on all of these issues, including sustainability, but D&I in particular. So I think it really, it's the typical legal answer. It depends. Where do you have the information, the resource? More importantly, I think what you're going to see, and we did it a while ago, you're going to see it put into a charter. And then secondly, I think you're going to see in skills and experience matrices that we put in our proxy, you're going to see this actually as a skill and experience that you're going to, so that you can see, what do you have and what you may need to recruit for. So I think that's probably something that, certainly the larger companies are thinking, but you're going to see the midsize and the smaller companies, maybe someone that has human capital management, but also has sustainability and climate, depending on the industry that you're in. But, again, that's the crystal ball. What do you see in the next couple of years?
Well, thank you so much for your time and expertise. Always so wonderful to see everybody and so nice. I don't know why it's so dark in here, but it feels gloomy just because of that. Thank you.
Thank you, Brock. Thanks so much.